So hi everyone. Thank you again for attending. We got a packed TED Talk for you guys. We are going to touch bases on psychology, finding the best entries, and then we will cap it off with the Q&A session, as well as a giveaway to end it off. So first and foremost, we have a guest speaker from RCG. He is a respected and seasoned trader that is knowledgeable with the ins and outs of the fractals. And he is here today to speak on the new impending fractal update that is set to come out very soon, which comes out with the new feature, the Spread Monster. So I just want to say thank you on behalf of everyone in Ascend, Ameva. Really appreciate it, and feel free to take over.
Thank you for having me. So today we're gonna go over the Spread Monster. It hasn't been released yet. Russell's still working on it in the background. So I have access to it right now because I'm beta testing it with a few others. So if you guys have any questions regarding like any specifics of the Spread Monster, you can always add me in the chat or just unmute yourself if you can. So with the Spread Monster, there's two different ways to accumulate data. There's one with HL matching and weekday matching. It uses geometric matching with like specific math that Russell has that's special to his code. And so with this, we get volatility ranges based on what's the outcome of the next day or forward-looking however many days based on the projection we choose. So currently it's up to 10, I believe. It should be more. Yeah, it's up to 10. Russell's gonna add more, but after that, then it's gonna be easier to see forward-looking like a month or maybe even a year. So with the volatility, I believe Russell explained it in the video that I posted with the Spread Monster. Volatility is like based on a specific formula with the geometry of specific maths that Russell has placed. It basically calculates forward-looking of odds on specific price ranges from past data, and it also collects option data regarding that. And that's how we would be able to. Let me show you how. We'd be able to do basically calculate spreads based on the Spread Monster's data. This allows for like people that sell spreads or just iron condors or any type of specific option strategies to take advantage of it and have edge in the market. And with this, we would be able to calculate whether we take profit on a specific condor or specific spread that we have on the contracts, whether it would become an outcome to our edge or not. And yeah, that's about it for this options for now. Russell has still yet to update it. He has to update with the what's called data collection fee, because they're having like a bit of issues in terms of delay and all that, and then it has to do collection of like mass data, and then that would allow us to like get better access and information, basically what's called seeing specific legs. It'll basically do it for us instead of us doing it manually. But for now we could do it manually, and then later on what's called Russell would make it basically automatic. So it will basically give us specific strategies based on that specific contract, whether it be iron condors or specific spreads, and that allows us to determine whether we should be able to take that trade or not. Basically, in simpler terms, like Periscope, but with like spreads. But it's not really guesstimating. It's more what's called calculated data with probabilities, edge in our strategies. But that's if you're trading specific option strategies such as iron condors or what's called selling spreads. If you guys have like specific questions regarding the Spread Monsters, you guys could raise your hand and ask. Let me know.
How's it going, Ameva?
Yo, what's good?
So Ameva, did you kind of go over what the spread capabilities are? So I know like in the video with Russell, he kind of covers some of that. But I think some of the people listening probably don't exactly know what a vertical spread is. That's probably one of the simplest forms.
Yeah, I just explained basically with the Spread Monster currently, we could be able to determine like what type of spreads we can take based on the what's called volatility matching and all sorts. Since Russell mentioned that specific options we can take profit 90% of the times with what's called success, or sometimes it goes to zero and doesn't allow us to take profit.
Okay. So for everybody that's listening right now, Rogue Moose, he's not with us right at this moment, but kind of part of the strategies that he's developed with how he's spread trading, and more specifically how he's using it with the neurals, can still be applied towards the spread monster. So when you're taking a spread, like on spread monster, and you're seeing like the floor or the ceiling and it's kind of getting capped, well, you can sell that premium on it. So if you're doing like a 5 wide spread, you're buying one leg and selling the other leg, and it's $5 wide. And like on SPX, if you capture $1 in premium on it, being on the theta game, you would adjust like ideally your stop loss to about 2 times whatever your profit is. So it's not like you're going, full loss on the $5. You're looking to capitalize on $1 and risk $2. But in most methodology that people are used to, like in futures and options, you're like, well, the risk reward is not great because you're looking at, risking 2 for 1, but you have to look at the probabilities of it. So when you have a high probability rate, greater than 90%, and you can manage those risks very simply, it makes things a lot easier. So it's kind of a different thing when you're moving into spreads versus long calls and long options and futures. It's a different risk parameter. Does anybody have any questions?
Hello. Thanks, Milk, for coming to our meeting. I just want to read you some questions that are in the chat. Like Bubble asked, could you simplify what we are trying to look in regards to futures, aka ES?
What are we trying to look at?
Yeah, I believe how do you utilize it? Is what I think is like Bubble's asking. Not sure if you could clarify it a bit better.
Ameva, can you pull up the spread monster? I got it on my other desktop, so I can't pull up like ES the 1 day. So what we're looking at here, guys, is we're kind of looking at the volatility projection for Monday. So as you kind of see there, the white line, that's what we're calling our apex. So it's in similar fashion to a pivot, right? Long biased above, short biased below. Now, does that mean absolutely short below and absolutely short or long above? No. You want to still take into context, relative to like what you see in my charts with, positioning. What is the context of the session? Are kind of longs favored? Is there structural elements above and below? I kind of layered these data sets together to paint that bigger picture in my utilization. Now, with all the data sets we have, there's not necessarily a wrong way to do it. Developing your own system with certain data, obviously you're not going to just look at it and know. But when you start pulling some of this data, incorporating your charts, and then use it like an anchor, so you're testing it every day, test a certain data set for like a week or 2, you'll start to find, some confluence with everything. So like what we're seeing here on the historical volatility here, it's showing for Monday, the odds above and below, we're looking at the green line there where we closed. So technically we're under the apex, we're short. And then it's kind of given us our projection on the volatility. So like our wall long here up to 32 or 5302.97. And then our wall short all the way down at 5215.50. So it's saying that we're going to trade within that majority of the time, and only 25% of the time will we deviate outside of that. So then we can start to look at, okay, if we're outside of that deviation, that 25% outlier area, we can start to consider, okay, it's not a good term, overextended, but we can start to consider, the favorable R to R for reversions. Now, if we take a look at the density one. If you right click on there for me, Ameva. How we kind of see these wave functions here. Now it looks a little clustered right now because it's on the 200 wave, and you guys have been seeing me post the wave functions for the 50-day, 200-day, and 500-day. And as you've seen them on my charts, I kind of stagger all that data together. So in my utilization, when you stack those together, when you have the downside risk level and the upside move level, so like at 52.39.73, that's saying, hey, volatility is going to stay within about 50% of the time at least. And then the same for the upside there at 52.85.50. So majority of our price action is going to stay between that red and that green line. So as you can kind of see, most of the waves stay within that function. Now when we start to deviate outside of it, that's where we start to kind of consider, okay, we're outside of normal volatility, right? So we can potentially get an outlier move and follow one of those wave functions all the way to the top, like we've seen today, and then all the way to the bottom, like we've seen yesterday. So those are pretty good projections. Now you're going to notice like majority of the lines show that where we close price today, that it's a higher degree probability that we open at least a little bit to the downside before we potentially reverse up or stay pinned. Now there is about 4 or 5 lines that show the upside. So there is still, a margin that we open up and go up in the open for Sunday evening for futures. So the kind of the important aspect, like obviously you guys don't have access to it, but when you do, and you can scroll through this, you can take your cursor and, go to where you see the groupings of the lines, and the more lines that are grouped together, those are overlaying waves. So those become either very supportive or resistive. So then wherever you highlight your crosshairs to, it'll give you the price down at the bottom where it says crosshairs price. So like where he's at right now, 52.88.62. That's showing for Monday that's going to be, pretty resistive. So it's just like what we see on the normal fractal chart, in the sense that when we have a bunch of cluster ticks, like on the right side of the fractal chart, the more hashtag ticks that we have that we call clusters, the more they're clustered together, the thicker that black line is, the more resistive it is. So it's going to take a lot more considerably to get past that. So that's, where we can start to look to manage risk as well. When we're trading long biased, we know we can start to risk off there because it's less favorable to continue up to the upside. We still can, but we can start to manage our risk there. So when we get some of the other functionality in the spread monster, we'll have, kind of some automation features, somewhat like Russell had alluded to in the spread monster video, that the open discussion chat, they have the video. I don't know if Ameva or A-Train's posted it in the sun. I think it should be. But I do recommend watching it. I know it's kind of long. It's like, I want to say 3 hours or so, Ameva, something like that. So it's a lot. It's pretty good though. It's an open discussion. So, Russell does a pretty good job going over stuff, what we're looking at, and, some of the things that we can allude to in the future. So when we get some more of that functionality, just like what we have with like Algo Fun, I'm sure probably not too many have played with that, but that has parameters where we can identify and cycle through trades. So a lot of people are like, hey, how can we automate and filter, what trades we're looking for? Well, Algo Fun
The following
does
68
that.
stocks just crossed the pivot line to the long side. BBY. Wave 10-15 minutes. TWLO.
When it even talks to
760
you.
minutes. TGT. Wave 760 minutes. Team. Wave 7 daily. T. Wave 7 60 minutes.
It's not going to be muted.
I know there's a mute feature on it, but so with that though, it's kind of cool because you can go through and be like, hey, I want to identify trades when they cross above pivot, or when they cross above or below vectors, or when we hit neurals, or a lot of different factors that you can say, hey, I want to scan for these different trade setups. And what it does is it picks up on them and cycles through them. And then it can talk to you too if you have your mic on. So it's actually pretty cool to play with. So if you're looking for, some automation and as in a scanner, it's pretty nice for that. So that'll be another kind of aspect that, we'll somewhat see with, Spread Monster and a lot of other key features moving forward. It's just getting everything together and getting everything over from the Visual Studios, doing all the code conversion from Russell's old systems. Hundreds of thousands of lines.
With the algo phone, you could also determine like specific swing, whether it's be for like months out or like weeks out. Usually I use, whenever I see like wave 7 daily crossovers, I use that for any type of swings, whether it be 1 to 5 in a week. This was also adding in seasonality. So with that data, we would be able to collect like specific information regarding whether ticker will see more upside or downside in specific months or specific seasons. And once that comes in, it will be easy.
Oh yeah. So some of you guys already know that we have like what we call our data warehouse, where we're collecting and storing all this data, and it's kind of what builds out the SQL models. So it's a query that you can do, be like, hey, I want to look at, what's the normal price deviation on Fridays? How many points does the Qs usually move? I think today was like 5 points, Ameva, the one that Russell posted earlier or this morning.
For QQ?
Yeah.
Yeah.
So he posted, through the SQL query, pulling from our data warehouse, that looks at, the average move for any given day of the week. And then you can also configure it, as Emilio was talking about, like seasonality, news. We have those features coming in. Rogue Moose is working on that right now, the news bot aspects. There's just a lot of cool stuff. And then like in the future too, we'll be working with what we call LLM, large language models, where it'll be what we call native language. So you'll be able to essentially almost do like what you do with Chat GPT, type in, hey, what's the average move for Qs, and it'll give you back a smart response on it where you don't have to necessarily code it out, so to speak. So this is kind of cool. I mean, I can show you a little bit on the SQL queries from the data warehouse here.
Yeah, so with the QQ, Russell already has it set up for like the whole week, Monday, Tuesday, Wednesday, Thursday, Friday. So today was about a 7.2 range, I believe. We had our range within this basically area. You can use basically all these bars as like, basically think of it as like a support and resistance basically. So the maximum amount of times that we hit like $7 a day for like Fridays is this many times with the bars. Have higher probabilities of having more with like $0 to $4 ranges for Fridays rather than $7 to $8 ranges for Fridays. That helps us sometimes determine whether we have trend days or we see chop.
Yep. So that's a pretty good utilization. There's a lot of other SQL. Yeah, I mean, you can actually write any SQL you want in there. So certain queries are already auto saved in there. You can write some of your own and put them in there. So like up at the top where it says query name, you can go in there if you're somewhat familiar, or if you want to learn SQL, you can actually code it in there. Kind of like Python, but not Python. How you write out your scripts and everything. Also, Moose has some saved. I'm not sure if he has them posted in Ascend, but you can also ask Moose if you want some queries on some certain things if he's available. He's pretty good with that.
With most of his queries, he does sell spreads, so it's easier to determine like specific trend days with like his neural levels. So if we have like specific amount of days that we hit the top neural levels or the lower neural levels, that will help us determine whether we sell the puts or what's called sell the calls. This helps this is what Moose does basically sometimes daily. And basically that's how he trades with his neurals. And that's how he basically takes the edge in the market, allowing him to profit like specific days. And then there's some days where obviously we have like rangy days where selling spreads won't be that much beneficial, rather than one-sided it will be more beneficial.
That's kind of the nice thing, being part of the what everybody calls the theta game, being a option seller, so to speak. You're capitalizing on pulling in that premium and on low volatility. It's amazing, even in high volatility with utilizing the neurals and stuff. And I can't remember the hit rate on it, but I think the way Moose has it, it's greater than 90%. I don't think I've technically seen it fail yet, but it can. Nothing's 100%. But with like using the SQL queries, you can be like, hey, how many times have we hit the upside neural 1 or 2 or 3? And how many times have we hit, downside neurals 1, 2, and 3 on any given day? How many times have we had a double tag, top side to bottom side? Like all those kind of stats are all available to be pulled from the data warehouse. And so that becomes pretty actionable when you know what days of the week are more volatile than others. I want to say, was it like Monday or Tuesdays? It tends to be market abroad has less volatility, so like you can capitalize a lot with a higher probability on selling spreads on those days on the neurals on certain parameters. There's quite a few cool things you can do with it. And then, did you go over any of your favorite time frames, wave functions, Ameva?
I mean, majority of them I feel like it's said in the videos, but if you guys want to look for like intraday with like what Russell's usually does, 10, 10, 15. So 10, 10, 15 is what Russell uses for QEQ. He uses also the what's called 3-5. Yeah, he also uses the 1-3-5 for intraday. And for swings, you want to mainly look at the daily time frames, usually from the 1 to the 7. Currently with Spread Monster, I'm testing out with. So in the past, we used to do with Russell what's called the generate buy signal, where we forward look what's called the percentage odds for the next day. We used to use 1001 daily. So currently I'm using for the Spread Monster 1001 daily for the whole week to see how price reacts with specific levels for that weekly Spread Monster level. And currently it's not bad. We've had specific price action react to it. I have a trading view chart for it. So I use the 1-100 and the 1-1000. The 1-1000 was from the general buy signal that we had from before. And so the 1-100 for this week, we had support from it, and we had what's called rejection from it. That's where a lot of the sellers came in from the 1-100 spread monster level. And then we came down to 100 and 1-1000 levels. And then we gained support from there and then continued up. We don't look at pre-market for this. We basically look at the intraday. And so yeah, this candle is, I don't know what this candle is faded. But yeah, we built support here and then just had a rejection. But as I've already beta tested more, I'll give out updates on it. on Ascend, and I'll try on RCG too. And then yeah, from that you guys could use this as weekly levels to see like where's the most highest point of resistance or support. Take trades from there, or if you're like a swing trader, you could do that too. So I had swings from here for calls after we gained support from here. That was nice. What's called 120%. But with theta, after the news crash that we had, it went down. And then obviously after the downside day we had, we built support from here, and we had upside today.
So those are pretty sweet. So what Ameva's showing is pretty classic of what you can do with the fractal data. Like it's almost limitless, but you build your system. So like he's showing an example of one utilization. Another one, like if you're looking at the weekly, I showed I think Sam in the other server. If you use like the wave 7 1 day 150 and then 50 days loaded. Yep. So you can go into the do wave 7. So this is similar to a yellow box function, but you're looking at it as in a weekly time frame. So if you're prepping for next week, now that the market is closed, this is a good utilization for it. So you can go into your option analyzer and pull levels for that as well, just like Ameva was showing for the Qs.
Yeah, you can see here, we have two, what's called support areas, and then we have our resistance areas. So what Russell would usually do here, he would draw what's called like a green box, and then he would draw a red box here. That basically gives our two ranges. Once we break out below this range, then we obviously move to a different time frame, see what lower supports we have until we reach further down. And then we continue to the upside after the pivot cross. Obviously, we would head towards our cluster, or we hit called one of the resistance points from the H values.
And for some of you guys that might be newer watching this, like if you can look at it and look at the symmetry of it, like how clean the tops are, how they align, and how clean the bottoms all align. So it defines a pretty clear range. This is, it's pretty actionable, especially if you're using it for a weekly level and doing like some swing trades. See, that's just too beautiful. So you can use the upsides if you're trading two, or if you're looking for, reversion plays. There's two different kinds of incorporation you can do there. So you know where to risk off or where to look for reversions at. So that's just one more incorporation. Then another one is like the 51, wave 51 for like intraday scalping. I referenced that like on SPX, GSPC, Yahoo's assignment name for SPX or for ES. So like on ES today, it played out, quite a few times. And so typically, I think it'll load on 2 days on wave 50 1-minute aggregation. Now, when we get more volatility, we want to start looking at like the 3-day and the 5-day. So like it'll pull more data, historical data. And then you can turn on the percent zones and they'll line up a lot better. So you'll see like right now we exceeded that yesterday and today pretty cleanly. But on a lot of days, if the 2-day, if we're in higher volatility, if you go to the 5-day, we start to get better ranges on it. Now, when we exceed those outside of like scalping, that's when we can start looking at like the wave 25-minute or the wave 10-15-minute, and those line up pretty cleanly. Like today, we had several of those on ES. I think I posted one of them in general chat this morning. If you guys look in Ascend. See, we had what a question. Can I see the 2% and 5%? Has good risk to reward for reversion. Yeah. The 2% and 5% are usually really, really good. Like a lot of time we obey like the 10%, but when we exceed that and get to the 2 to 5%, it's really, really good. And then Zeno had a question, what's the indicators to mark every week on TV? Well, we don't use, I'm guessing he's saying for Tradovate. That's what TV is.
I think he's saying
TradingView.
Oh, TradingView. Yeah. TradingView, I know like abroad is more popular, but here in the States, I mean, there's still a lot of people use it, but most of us don't use it. I don't know what you use, Ameva, but I'm not the biggest fan of it.
No, I don't use TradingView. I use what's called Webull and TOS.
Okay. Yeah, I mean, if you have access to like TOS, you can load in the vector scripts too. So there's a lot of pros and cons if you're doing options trading, and using the fractal system for that. And then Thick Bubble was asking, where could we find the scripts for the 5% and 2%?
All right, so let me just show you guys. Let me just edit script code. Go to, it's called a cluster node. Just scroll down. All right, so you guys will see this. What's called draw percent probable. So you just copy this, and then just make the new line. Just go to the new line, paste it, and then just replace the 2 for whatever number you want. I'm just gonna do 1%. So I can show you guys.
And whatever you guys do, don't delete blocks of code. So just be observant if you're doing that stuff. So some people have done it and they're like, oh, how do we fix it? So we got to go into the system and reset your user and do stuff like that. So just be aware.
Yeah, if you guys have any questions about setting up scripts, let me know, because I know a lot of people end up deleting them and they're like, hey, where did this go? And then I have to help them reset the whole thing up. So it's more of a struggle for us when it happens.
Mm-hmm. It happens, but
yeah,
if you're aware of it, it's a little bit easier to manage. Yeah, Shaban said he never knew that was possible. Yeah, it's pretty neat because you can add different percentages. Like if you end up wanting to kind of data test and you see like some of the clusters that are grouped together, you can go in there and kind of play with the percentile and be like, okay, where do those clusters most typically line up? Like if you have some kind of outlier that's not within that 2%, 5%, 10%, 20% line. And then also like sometimes when you're looking at tight time frames like the 51, like the 80 percentiles, be really close to the pivot. So you might not use those as much. So you could, remove those for the time being and replace them later if you wanted to use them. Then I think that'd be for Moki. There's a question there. It says, for now, we can't have an access to the fractal, right? Well, I think in the premium section, so the members are having access.
Oh, did you want to say something? Sorry.
No, go ahead, Moki. I'll let you speak on
that. Yeah, so it's pretty much only for premium right now, but I just wanted to show in chat how incredible the spread monster has been doing on crude oil. I just want to personally thank you for sending it over every day, because man, it's like the trades I've been able to catch have been pretty insane, along with your teachings. So if you take a look on, I believe it's Wednesday's chart, the spread monster 200-day average caught the bottom by 2 ticks, which was, I'm pretty sure A-Train caught it because he's a night owl. But on Thursday, I was able to catch multiple 30-point scalps because of the Apex and in combinations with your teaching. So yeah, thank you for that. Also, thank you for updating the crude oil chart to reflect the proper delta aggregation. It's been like night and day trading it. So thank you for that, Milk. Appreciate it.
You're welcome. Yeah, it can be pretty powerful staggering those data sets. You have the structural elements that I have built into the yellow box, and then utilizing the spread monster levels in there, really kind of gives you a really good feel for the market, so to speak. So like every day I've been sending Moki the 50 and 200 on crude, and he just posted some pictures of it in the chat room there. You can see how cleanly they play out and define the parameters for the day. So like every day is showing pretty amazingly like normal volatility. So every time we typically tend to exceed it, we tend to revert. So you can see how much we stay within. And then you can see how the apex, kind of defines like a pivot. Price action is long above, price action below is short below. So just like with any pivot, some of you guys might be familiar, but every exacting pivot. So like when I post mine every day, I do mine in zones because we have, price exploration. So sometimes, we might wick through it for a second, have some price exaggeration through it and then revert. So when we see those, retest on those pivots, just like you see on ES, but you can also see that in CL, that's when it becomes even more actionable. So it's always important to, kind of read into that context. Anybody else have any questions?
I think 𝒕𝒉𝒊𝒔 has one coming, and then probably going to be the last one, I think.
Okay.
You set order limits. I think we're going to touch base on that. It's actually a creation by Milk that was taught to Carson. The 3-7-10 rule, right? Is what it's called?
Yeah, the 4-7-10.
Oh yeah, 4-7-10 rule. I'm reading this. Yeah. But yeah, we're gonna touch base on that a little later. And 𝒕𝒉𝒊𝒔, I'll do that.
There's a lot of different type of strategies to manage your trades. But yeah, limit orders are used when we're trying to get exact entries.
And those are pretty much preset bracket orders that we can do through the exit strategies.
Correct. And then looks like S-Band said, haven't really looked into that, but Milk, do you know anything about that? I know you don't specifically trade NQ.
For NQ, that would be a hard no. 4-7-10, you would not use
yeah
4
yeah.
4, 7 or 10 points at NQ. No,
your account would get demolished with all the volatility. Yeah, ES, it's like a match made in heaven. From what I've seen ever since like you guys showed it to me, it's been like working like a charm, especially with like really good entries.
And that's what it's all about. It's like, risk management, know your instrument, know your market. So every market has, different parameters that you kind of want to utilize to manage risk, and also associated with your style of trading, whether you're more of an intraday swinger, if you're playing off, hard zones or hard levels, you can manage those risks, like on ES, at 2 points or 4 points, like on the zones you see me post. If you're doing breakouts, you can do different strategies. If you're doing more of a cash account where you have the ability to leg in and position in, you do a different stop and leg parameter. So just really depends on, your strategy and your style.
And I would like to add that with the 4-7-10, what I really like about it is the small first TP, just getting 4 points. Something about taking a little off and increasing your average for the other cons helps with the mindset as well. I feel like getting something out of the trade, feeling like your analysis or your execution was correct, even if it doesn't fully play out, helps a lot with beginner traders.
I think that's what, and the A-Trading was just speaking, also very good for funded accounts on drawdown.
Yeah, you don't want to go up 9 points and have just a generic 10-point TP and then go back down it's basically essentially losing money because you have less money, less room on your account. That's a misconception. Many people think that they don't realize until they have very little left that they've kind of gotten eaten up by the trail.
And that's a whole different dynamic, having drawdown like that.
It does make people good traders, and you could do it for not at loss of a huge amount. So I definitely recommend starting on paper trading or a funded account.
So Thick Bubble is asking, do you typically run a 5-point stop loss, or does that depend?
Well, the callouts in the Ascend Premium, we keep it around that 5-point. We'll change it depending on pending different levels and whatever we're looking at, MGI. And in the premium section, we do teach the yellow box. There are a ton of videos on how we use it. Probably about a few hours, I would say, about videos on it. And then Mel posts his charts for motive wave users with all the levels and yellow box already done. So it makes it super easy, and you could learn it.
And that's pretty nice too, because you can back look on it. I mean, I have everything posted in my alerts channel, so you can look at screenshots of it. But if you have motive wave, you can actually look back and see how everything performs. So everything's there. And
when I first started, what really helped me, well, I'm new to this still, but when I say first, I mean about a year ago, having the stuff that Milk implements into the charts, like single prints and all the other stuff that you could learn about, is super helpful.
Yeah, I mean, context is everything. So if you can learn to read price action just like a storybook, know where bigger funds or the big money's position, where to expect a reaction at, just like yesterday, the LTF positioning, that was beautiful. It worked out today too. I was still looking at longs being favored, which they still were. We still got like a 30-point drop off the LTF positioning. So that was one trade. But the pivot to the seller positioning, once buyer's objective was demolished, we tested it like 3 times. On the 4th time we broke through. So that's typical rules, for trading any kind of supply and demand, so to speak. It's similar but not the same. Once you test it, retest it, and usually by the 3rd or 4th time, it's invalidated. So you're looking for it to break through.
Sorry, Milk.
I was just gonna say too, like on the vectors too, that's a pretty common question. So the vectors within the yellow box, those are, you'll see the E vector and S vector. It's kind of like a double confirmation. When we come back and do back test, you want to see it sustain, both of those or one of those without cleanly breaking through the other side. So it helps you give price action directionality, especially in the overnight and ETH session when it's more mechanical and less order flow and price action.
Anybody else have any questions for Milk and Ameva? I just wanted to, anybody? Oh, I think we have one more coming.
Oh, I also want to say that although the spread monster is in beta and not everyone has access to it, Milk does usually post screenshots of it in premium so that people could learn about it now.
All right, so I think that was all the questions that were asked. I just want to say thank you so much for Ameva and Milk from RCG. Shout out to RCG. Thank you for sharing the spread monster knowledge with us. For those who have no idea what order flow is or are interested in taking a session with Milk, feel free to DM him or us. And usually if there's enough interest, there will be a group session held. So Anything you want to talk about, Milk, about your sessions and what you teach? It's pretty
Take them.
in your
Yeah.
charts.
Yeah.
That you like the magic.
Yeah, I like to me, teaching's important. So it's, I kind of selectively choose people, so to speak. If individuals are serious about it, that's the most important thing to gauge. It's not a magic button. It's not a magic solution. It is doing your homework and learning to study and read the market. So, you have to be willing to put in the work. And if you do so, you will get those reads, just like you're seeing with, A-Train, 𝐀𝐬𝐜𝐿, Carson, they're, for lack of a better term, killing it every day because they can identify those highly actionable setups and use patience to execute them on, instead of guessing and gambling and what I call crayon charts, just looking at your typical candlestick and be like, oh, there's a pattern there. Well, that's a setup. Well, there's a lot more to it. So data is king. Only a certain amount of time I have available in the day. So, sometimes when we get a bunch of people, I'll do a group session to go over all the concepts and basics, or what I call basics, but more advanced structures and order flow.
Yeah, so like Milk said, if you are interested in taking a session and change the way you view the market, feel free to DM him or us. And hopefully if there's enough interest, there will be a group session made. Any closing comments, Ameva or Milk?
Well, you guys are in the right place, I'll tell you that. Ascend Trading runs a damn good program. I'm pretty proud to have them as part of the Fractal family and all that they do.
Since Ascend Trading servers authenticity is like what's key. You won't see that a lot in other different servers. A lot of the other servers are mainly like they just want to benefit off of you. I feel like here you could actually benefit from the teachers here. They would actually teach you, and then you would actually learn something rather than just being left behind.
That's the important aspect too, right? You're learning. You're not just blindly following, and that's what Ascend brings to the table.
We had one more question, just if you could touch up on it, Milk. Someone asked, they sent a picture and they asked about aggressive dom positioning, layering.
I can go over that in the mentee chat if he wants to ask that. It's a little more advanced structure.
All right. Thanks again, Milk and Ameva. We really appreciate you. I'm pretty sure everybody does. Thank you for taking the time out of your day to come and speak to us. I know it's a Friday, so we know you're going to go out and party, especially after a day like this. So thank you so much for coming and talking to us, because man, what a day today.
What a great week. Thank you, Milk.
Yeah.
Thank you, Ameva. We appreciate you guys coming on.
Yeah, no worries. Hope you guys enjoyed this week.
Enjoy your weekend, everyone.
Thank
It
you.
was a pleasure.
So we're gonna start the next segment. Thank you everyone for coming. I'm gonna let Milky take it away.
All right, guys. Good afternoon. Once again, thank you to Milk and Ameva from RCG. So today we're gonna dive in on the importance of psychology when it comes to trading, followed by a recap, and then for those who stayed in this meeting's entirety, there will be a giveaway. So yeah, lots of stuff to get into. And before I start, I just want to say how important it is that you be an active listener and reflect and actually answer these questions that I will ask, because they're supposed to hopefully make you realize some faults within yourselves. I'm not saying that everybody has faults, but it's just a common occurring thing that I see in the trading community. All right, so let's get started. If Goose could share a screen. Okay, there it is. So I'm pretty sure most of the people I see in attendance, it's pretty rudimentary how important it is to have a really good trading psychology is. You can have the best trading strategies and access to the best tools, which are, of course, Milk's yellow box, fractals, and order flow. There's literally quite nothing like it. It's revolutionary and groundbreaking. And like Milk says, you're not guessing, you're just based off of data and facts. And you could still be unsuccessful if your mental discipline isn't on point. I'm sure many of you have made a plan, however, have failed to stay true to it. So I kind of want to ask you this random question. Goose, if you could go to the next slide, please. So this question is, it sounds kind of stupid, and it kind of is, but if you burn your hand on a hot stove, would you do it again? And obviously the question is no, right? That would be dumb. Why would you even think about doing it? I'm pretty sure everyone had an experience in their childhood when they were younger. They did something that caused them pain. In this case, it's a hot stove. And learn to never do it again. Because in your mind, you know the consequences hurt really, really bad. Now in trading, one could make the comparison of burning your hand on the stove over and over, but in this case, instead of burning your hand, you would be losing money. You don't learn not to do it again because there is no pain. However, there is a monetary loss that starts to garner, but you just don't realize it. And it's a pretty bad habit that I see that's developed in the trading industry, especially when it comes to prop firms. Usually I see people aren't afraid to fail or for comparison's sake, burn their hand on the stove. They felt countless amounts of times and have subconsciously developed the poor habit of throwing money at their mistakes rather than taking the time to reflect on the mistakes they repeatedly make. They usually at this point think of money as an afterthought and think, oh, you know, Apex will always do an 80% off sale, or I can just load up money in my account. Some people, I see the habit of losing money has pretty much become compulsive. So the goal of this talk is to hopefully snap some people out of this dreadful cycle. So Goose, if you could go up to the next slide, please. So the goal of this question is to hopefully snap some people out of that dreadful cycle of losing money and not doing anything about it. So here's like what I would consider a wake-up call question. So as I said in the beginning, I hope you guys answer it, but I don't want you to type it in the chat, obviously, because this is more so a personal question rather than I want you to look inside and just pretty much self-analyze and think, have I been losing a lot of money and not doing anything about it? So I'm just going to take it like 10 seconds for you guys to think about it. So after thinking about that question, I'm sure many of you have realized possibly you have lost a lot of money. Now, the problem is that the problem doesn't lie in losing, because everybody loses, right? Carson, A-Train, me, Milk, even the best of the best lose trades every now and then. The problem lies with the amount of losing there is. If you realize you are consistently losing money and are not doing anything to remedy it or learn from your mistakes, you are caught in the cycle of being complacent with losing money, which is a pretty insane thing to say, right? But it's true, and I've seen it time and time again. So let's take a look on how we could break the cycle and what are some steps we can do to start the transition to good choice making. Goose, if you could go to the next slide, please. So pathways to success. So here's a flow chart. We start off on square one, which says blowing an account or making a mistake, which could be either taking a bad trade, losing money, blowing a prop firm, rage trading. You know, every trader goes through a different journey. Now, a lot of people go to the blue square and sit and reflect on why the mistake happened in the first place, which this is where there's two paths the trader could take. They could do nothing about it. They could continue to lose money and not learn from their mistakes. And they could repeat the cycle of just sitting and reflecting while doing nothing about it. Or they could take a note of what they did wrong. Maybe they overtraded or took a bad setup, and they just need to realize that they simply don't need to do it anymore. And they need to realize the pros and cons of making the same mistake over and over. And then once you write down the pros and cons of making the same mistake, you would realize that there is a lot to lose. Once you identify the mistake of what you have been consistently doing, try to find a solution to it. So like if it's rage trading, take a walk. If it's taking bad setups, make a checklist of what you could do to enter a better trade. Or if you're stressing out over a trade, maybe you should size down. But like I said, every trader is different. Now here is like the most important depth, or the most important thing I see, because I see it time and time again. So let's say a trader does make a plan. They do realize that they're a rage trader. I'm going to use an example of a person who rage trades. So let's say that rage trader did have a bad mental. They realize it. They took a note of it. Now let's say they have a bad trade. So here's the problem. They're going to relapse because they aren't a disciplined trader, or they're not consistent. I've seen that happen time and time again. The plan to not rage trade or size down or whatever the plan was becomes an afterthought, and they pretty much break their own rule. So that's the hardest part. When you are at a crossroads between a bad habit and sticking to your plan, usually people aren't disciplined enough to enact change. So it's really up to you if you want to make a change and start becoming profitable. It's like the saying goes, you are your worst enemy. So yeah, so it's really up to you. So the questions I have for you guys is, are you actually following your plan? And when the time comes and you're about to relapse and return to your bad habit, will you stick to your bad habit or make a change? And why do you continue to make the same costly mistakes even though you know they cost you a lot of money? And what are some things to avoid the mistakes? And yeah, so pretty much if you are still doing the same old mistakes, it's really up to you to break out of the cycle and start being profitable. The last thing I have to say before I hand it over to my colleagues is never stop learning. Sure, you can solely play the yellow box breakout, but I would highly recommend taking advantage of all the tools available at your disposal. Take the time to, invest yourself and take the milk session. I'm pretty sure everybody here knows what a milk session is, and they've heard of how it's changed their perspective on trading. Learn how the rogue moose neurals work, the market maker tool, and learn how, the upcoming spread monster tool is going to come out. Take advantage of every single thing. And like Milk said, build your own system, because, there's nothing like you can't be a good trader without a system. So yeah, just want to say thank you guys for listening, and I'm going to hand it over to my colleagues.
All right, so this is from yesterday, and Milk posties, and I just want to highlight of what an insane day and week this was. I don't know if you guys were in trading or if you guys were doing what you're doing, but this was a great week, and I want to celebrate it. I just want to acknowledge it. As you can see on the next slide, you'll see that we zoomed up. I'm going to zoom up on it, Goose, if you could. We basically, Milk basically to the tick marked the zone out. That called the high day. And that just shows data is king. Adrian, if you want to touch up on your 1K option to 26,000.
Yeah, so looking at things like this, obviously yesterday was an outlier day. You're not going to have a day where you drop 100 points on ES all the time. But when you have tools like you do in Ascend and RCG, where you're using order flow and fractals, it really makes it a lot easier to catch moves like this, because a lot of people may see catch a 10-point drop on ES, and that's just enough for them to call it there because they don't really know how much further we're going to continue because, 10 points is a lot. But when you have tools like this, it really helps pinpoint solid entries and exits because with the fractals, I was able to hold $1,000 worth of puts into almost or to about 26,000, and that was just by using the fractals to show us how much more continuation we had to the downside. So when you really take the time to learn both order flow and fractals and combine them, you can find some pretty solid setups and know when to enter and exit them.
And with time, using all these confluences, spread monster, structural levels marked out by Milk, fractal levels, neural levels, you could find some trades where you know that it's fully A+. And once you develop that knowledge, it really starts to help with your strategy and knowing what to take and knowing what not to take. Goose, if you can move to the next slide. I just wanted to show you guys what a day like yesterday could bring to the table. And by no means are these gains going to happen overnight, but they're very possible with what we give and what we try to teach. The left is Adrian's P&L for the day by using 1K. And Adrian, you're starting a Periscope alert challenge, right? Next week?
That'll be starting on Monday. We're going to start with 1,000. We'll go through some Periscope plays every day, see if there's anything we like, and then we'll grab a couple, maybe like 50 to 100 per play.
And then if you don't know, we give a lot of education on prop firms. There's going to be more education coming out too in our video archive and some PDF files to show how to start using them. But with Apex and other prop firms, you could really leverage your profitability and make those gains that you're hoping for. Next slide, Goose. Thank you. So we're doing these little recaps to kind of help beginner traders see what's possible through the system. And these are kind of simple entries, but for we show the first one, the first short that is a good trade take with a good RR. It's S-Vector, which is Melk's proprietary software. He uses his own thing to make it, but he gives it out to everyone to use, and you can see the accuracy. Like 1, 2 ticks over, and then we had that huge, I want to say 10 to 15 point move downwards, and then a continuation after. And even the levels that we pull from the fractal system that are on the chart, they're super accurate. And then down below, you could see the structural level that Melk marked out was super accurate in calling the bottom of the day. Yeah, this was a pretty cool day. Just once again, just great entries. You could see the first short setup was a fractal level, and then we got that nice move off of retest of average range and pivot. And pivot is one thing that really excelled my trading recently. I've been using pivot a lot. It's a super easy way for beginners to create a good strategy. If you go into the day and you want to say that, all right, my main trade for the day is going to be pivot, that's obviously using more confluence and having more data is going to help. But if you go into the day and you're a beginner and you want to just work on your strategy before starting to take your own trades and using the charts in more of a in-depth way, you could take pivot trades every day, and that could be what you do. Pivot trades are great, and they usually catch 10 points, 15 points, and sometimes like today, I don't have a photo up, but sometimes today they caught the bottom, if I'm not wrong, when we started our TH session, and not the bottom, but it's caught the bottom of a good entry for longs, and then we had that huge move up. Once again, if you want to learn more about those and not just see it on the chart, you could DM Melk or talk to him. And then you could see, once again, the spread monster at the 200-day normal volatility did a really good job. And yeah, overall, we're constantly developing our charts. Melk always says that there's always more to learn. So these charts will continue to get better. And if this, is impressive, I know that Ascend and RCG have a lot more to come in the future.
And one thing before we go to the next slide, this is just another example of how many different tools there are, because this chart's a combination of both fractals and order flow. You can see there was that entry on the bounce off pivot, and then from there was a rejection off average range. The pivot's order flow, the average range is fractals. So there's a lot of different tools you can use between those two things to find very solid setups. Like then again on the move down, you had the bounce off the 200-day spread monster normal volume that Carson was talking about. Then you had to bounce back up to seller's objective or the new acting pivot, which is order flow for that move back down, and then the test again for fractals on the 200-day spread monster for a move back up. So you don't have to use one or the other. You can combine them to find a strategy that works for you. There's plenty of entries throughout the day with these tools, and just something to keep in mind going forward. You don't have to just use one or the other.
100%. It was a great week with all the extended volatility, but it was also a great week for the Yale box strategy, which we teach in Ascend. It's really pretty simple, and you don't need to have a lot of knowledge. And when you pair it up with multiple confluences like Melk's SVEC, you even increase the win rate. But this week, not by all means, not every week is like this, but I'm pretty sure, if I'm not wrong, Adrian, every single month has been green since we started tracking the Yale box.
Yeah, and it started back late April.
May.
First month tracked was May, I believe.
And this just shows the power of data and the fractal system. You would have made an easy 2,000 per con, and if you leverage that with 20 accounts on Apex, you would have made a lot more than that, 40,000 by just taking the trades. You guys are asking about the 4-7-10 rule. As you can see, we use it a lot in our alerts, and I'll talk about that in a second. But 4 points in profit, you'll take a third off. 7 points in profit, you'll take a third off, and then the last TP would be 10 points. I want to say that this is not a set in stone plan. Like if you're going to do 4 cons, you could always set that last con for 10 points. So you could, essentially improve the plan to how you, if you want to go for bigger moves, it's there. And this kind of just allows you to take profits as you go, and it just helps the prop firm game. There's a ton of other strategies. If you want to learn about more exit strategies, how you could set these up, I have a video on it. It's simple, but it's a motivate feature, and it really helps when you just want to learn, focus on your trade and your analysis, and you don't want to have to worry about setting OCOs, which are orders in MotiveWave. It has a really advanced software to allow you to set orders, and it's really good to take advantage of it. Not only is it super good with order flow, but it's really good with orders too. And then I just attached some of our alerts where we use the 4-7-10. And I would suggest if you are in, premium and you have a question on the alert, why we took it, I could try to explain it to my best ability. Some of the reasons I take trades, you'd have to go to Melk for, but overall, I just want to show you guys the power of the 4-7-10. And if we ever say 4-7-10, that just means that's the strategy you could use. And I'll repost the photo of it. So that anyone that didn't know about it or was confused could see it. And
just one more thing to add on. Like you see on the right, we did use the 4-7-10, but then there was also one additional TP that was 18 points up that ended up getting hit. So just because you use the 4-7-10 doesn't mean you can't leave a runner for whatever other targets you may have. And then this is a picture of the fractals. If you haven't been using the fractals and you're in premium, I very much recommend it. After this slide, I'm going to go live and show you guys an example for today's trade that went for 700%. But you can just see, just using those vector crossovers and percent probables alone are such amazing tools. So you can see on the bottom around that purple line where we cross over, that's vector. That when we're below pivot but above vector, you have a bullish bias, expecting us to move back towards pivot. And then we got that crossover, large move up, and then we tapped the 20% odds in that cluster at 52.85. had almost perfect rejection for a move back down. So just using those tools can help give very good setups and confirmations on your trades.
I just want to add that the apex that was on the yellow box chart was also that 20% band, if I remember correctly. So, when we say about, using multiple confluences, if you study and, like Milk says, do your homework and, you take account, different parameters, you could get entries that are higher probability.
All right, so I'm going to go ahead and show you guys the setup from today really quickly. Then Goose will have one thing to add, and we will get to the giveaway right after that. This is probably my favorite setup to see on the fractals. So when you're looking here, these are my favorite time frames to combine. The 50 wave 1 minute, 10 wave 15 minute, 20 wave 5 minute, and 7 wave 5 minute. And then I'll also add in the 1 wave daily and 7 wave 60 minute for more of a, I guess, larger time frame to look at. But what you can see here with that move we had down yesterday, most time frames, or at least the smaller time frames, are going to be at or below the 2% odds, which we don't typically get to. And there's always going to be times where we have an outlier and we just continue lower and lower. And on days like those, you have to learn when to just let it go. Don't fight the trend. Fractals are going to be wrong every once in a while. There are outlier days. But days like today, you have great RR to be taking trades like this, where we're at the 2% odds on not one, but 4 different time frames. Those 4 time frames I was just talking about. And then you combine that with some other things like the yellow box strategy. So we send out the QQ yellow box every day. And you can see that same time we were at the 2% odds, we were also testing the top of the yellow box. So what you would do there, we entered in, I believe it was 439 calls. And you had an almost perfect bounce off the top yellow box, and you just let those run all day long. And that's where we started combining both fractals, and then the reason we continued to hold those calls was a mix of what Milk taught with order flow. But then you can also see right here, when we had this crossover vector, we were still looking for a move back to pivot. And then when we did get that move back over pivot, you can see the candle opened up right here, right? Around 438.57. Over this cluster right here, a cluster is an area that we've previously reversed at, there was nothing up until 440.63. So we had all this blank space, which is typically just meaning that there's very little resistance in this area. So we had this whole move up, very little resistance, and that's the reason throughout the whole day we just held calls all the way through. And then when we broke over this one, it was the same idea. Over this cluster, we had nothing up until 441.81, and then we had our final price target at 443. And then real quick, if I show you guys the alert right here, we even called it out. Last trim, aside from one, we'll be holding till 443. Where did we get? 443, sold the last one, and then you had that move back down. So just combining fractals and order flow, you can get amazing setups like that. Just wanted to showcase how powerful it is, and I will hand it off to Goose.
Okay, so lastly, before we get to the giveaway, we felt the need to touch on self-reflection in regard to trading, especially after these past 2 days with the huge moves and even bigger gains we saw within the Discord for a lot of our new members. But in a world of trading where social media dominates traffic towards Discords like ours, when it really comes down to it, the reason people join our Discord or any other primarily comes down to how results outweigh the competition. And when day after day, social media propagates results in the 100%, 100 ticks, or whatever it may be, biggest gains are ultimately what become the driving factor for people who are looking to pay to learn what you know. What this leads to is a trader coming to a server expecting unrealistic exponential gains in a very short period of time. After joining the server and the gains stay persistent in regard to the callouts, as a newer trader, your emotional control and risk management are simply not up to par. And although those results are still possible, they may not be there for you quite yet. Because one may not be as developed as a trader yet, this often leads to mistakes such as either selling too early on a big winner, selling too late on a big loser, revenge trading, etc. The idea behind this, whether you're a beginner, intermediate, or further along, is to have the realization that everyone's trading journey is different. Some people's journeys take shorter, some longer than others. This is why it's so important not to compare yourself or your trading journey to others. Wanted to stress the idea of not comparing yourself to others and staying in your own lane today, especially after weeks like this occur. As you guys may have seen in the Discord, for example, A-Train and Carson had some pretty huge days this Thursday and Friday, executed their big wins exceptionally. However, from the regular trader's eyes, these gains are key factors to having feelings of jealousy and self-doubt. And if that sounds like you, it's so important to take a step back if you may have missed out or even been on the losing side on weeks like these, because these are people that have put countless hours and dedication into their trading for years prior. These are also people that are likely in a position to trade with much more capital than the average trader. Whatever the reason may be, they are not you. You have to just have the confidence in yourself and know that your time will come as long as you put the work in, just like they did. And allowing yourself to take a step back and self-reflect on what you didn't make, for example, that possible 50K today, is a key factor in becoming someone who does walk away with 50K day someday. As it's possible, most of you are either working on evals, have a PA still in the drawdown, or have just a small options portfolio. Those of you in which that applies to should be more focused on building those accounts up, following your plan, and knowing that those days are not far away. As a developing trader, although you may not have been one who walked away with such a crazy amount as today, there's absolutely things to be proud of, which ultimately comes down to sticking to your plan, which when done enough times will reward you with that huge day. When it comes down to it, as you all know, the yellow box strategy, the fractals, Milk's teachings all play out exceptionally, often seeing rejections to the cent or to the tick. Therefore, sticking to your strategy is ultimately the final piece, what is going to level up your discipline and push you across the finish line of becoming a consistent and profitable trader and reward you with those huge days in the end. So now I'll let A-Train, Carson, or Oki take over with the Q&A.
Yeah, I just want to add one thing to your thing, Goose. I'm pretty sure you touched on it, but I know a lot of people in the chat were telling me that they had FOMO about missing out, and I just want to say that that was just one day, and although there aren't many like it, there will be. The market will never not be around. So work on yourself. Not everyone's going to be at the same place, and even sometimes other people that may be less skilled than you, will catch a different move. Just want to add that. If anyone has any questions, add it in the chat or raise your hand. I would love to hear from anyone about their experience and anything else you guys want to talk about.
So just to add on what Carson and Goose said, about FOMO. So that's pretty much what differentiates a good trader from a bad one. Like Mag, he's a good example. He said he was pissed about missing the move, but he didn't over or revenge trade, and because he knows the market will always be there and there will always be more time to make money. So yeah.
So yeah, there's stuff on YouTube to learn more about order flow, but I recommend learning from Milk. There's nothing like what Milk does, so that's where I would go. But the first step would to be to start just looking and experiencing the chart. Like they say, like you can have the keys to a car, but if you don't know how to drive, it doesn't mean anything. Nutsi, if I know you know a lot about spreads, so if you want to answer that question that Scrappy said it just in the chat, you can answer it. Yeah, I would just start with utilizing his charts. Adrian, this will be recorded and posted, right?
Yep.
Adrian, Adrian didn't talk about it, but he did catch the move up today too from using what he made yesterday. So he did do better than what was shown. You had calls coming into the day, right?
Yeah, I swung some calls and then I grabbed some more with the call out that was sent out this morning. It's a pretty solid day.
All right, guys, any final questions before we go to the next slide? And just because this meeting ends doesn't mean you can't ask us any questions. You know, we're always around, but it's going to be the weekend, but just feel free to DM us.
So I just wanted to touch on what D2 Trappy was asking. You know, what should you know? Well, I'll be honest, don't know anything. Because a lot of these guys can speak to it, but unlearning old behaviors and a lot of your YouTubers that try and teach certain aspects of what they call order flow, like it's not what I do. Like everything I've done is kind of proprietary. I mean, they're built off, you know, some fundamentals, but as you can see, it's nothing like anything else out there. Everything I go over in sessions is very comprehensive. It's not that you need to walk in there knowing anything. I go over all that, you know, teach it in the utilization in the way it should be versus what a lot of people out there say it is. There's some traditional aspects, but most of it is not your traditional. So just keep that in mind. Don't think you have to know a bunch walking into it. Everybody from all walks I've worked with, and ultimately it's up to you. After we do the sessions, you know, they're recorded, so you get a chance to utilize those and study those. You know, it's a lot to absorb in one sitting. So, you know, never feel like you have to be fully prepared walking into one. You know, those sessions are for you guys when I do them.
Yeah, and just the results you see throughout, like the admins in Ascend, whether it's me, Carson, Moki, Goose, all of us have. I just started futures around a year ago, and everything I know has come straight from Milk. I haven't done any YouTube videos on order flow or anything like that. Took a session with him, put in the work, did the homework, and that's what's gotten me to where I am today. And I think it's just, I could be biased, but it's probably one of the best investments you can make in the trading space, because a lot of the things out there are scams and they just want your money. But you can see from just the results he has and the students he's taught, it really does work.
Yeah, just to add on to that, I just want to say, like, if you haven't given fractals a try, I don't know what you guys are waiting for. Like, it's like what the creators have done with the software is just absolutely insane and impressive, and I'm extremely thankful for like their creation, because without it, man, fractals is just absolutely revolutionizing and groundbreaking. So just if you haven't had an account, just I don't know what you guys are waiting for, because a lot of stuff is coming.
A lot of people could, you know, fear going into a lesson, you know, not knowing that much. But when I started, I went into, I think this was June, you know, so a while ago now. I went into a Milk lesson and I didn't know, I wasn't sure what anything was. And although my questions, I actually rewatched the video. I recorded my session for myself. I rewatched it, and the questions I asked were simple, and some of them didn't even make sense. But Milk's super patient, and he caters to your, you know, like where you are. So I wouldn't really worry about coming in not knowing much. It's all about you.
And to add on what Adrian said about how he progressed in futures in under a year, it's whatever you guys hear on the internet, how long it takes. It all depends on how much time you guys put in. So these gains are possible, but then it just all depends on how much time you guys put in. And with the resources you have, including Milk's teachings, the fractals, etc., it's really endless, and how quick you can make it happen.
Those are the winners. Free eval. If you guys have any questions, always feel free to add any of the admins. Thanks for attending. If anyone else wants to end it off with anything, feel free.
So yeah, just want to say thank you again for the special guests, Milk and Ameva, for attending. Really means a lot that you guys took the time out of your day to come and fit some knowledge to us. So really appreciate you guys. And for everybody that is in attendance, I hope this meeting hopefully made you had a little perspective change on the way you trade, whether it be changing your system or breaking out of the cycle of continuously losing money, which I hope none of you are part of. But the sad truth is I see a lot of people falling into this cycle. So once again, thank you.
I just want to say that we're going to be doing a lot more of these in the future. If you want to see a certain topic, I would go straight to Moki because he's going to be managing these. And if there's anything else you'd like to see, just let us know. Thank you guys for attending. Thank you for, being here with Ascend. And I'm super grateful. And I'm hoping that you guys find success in being here.
So yeah, like Carson said, feel free to DM me for anything. Like if you have any criticisms, something you could do better in the next one, feel free to DM me. Or if you have like a topic you would like to be discussed, feel free to DM me as well. We're gonna start having a lot more of these workshops. I'm gonna start building up the fractal course as well. So any newbies that are coming in are gonna have like a straightforward path on how to learn the fractals from the ground up, all the fundamentals and everything. So yeah, thank you guys once again.
What a great week. Thank you all for attending. We'll see you guys soon.